Well, I think the main thing is in diversification. XLMedia is both diversified in terms of geographies, as well as in verticals that we're active in and industries that we supply users to. We're also very much diversified in terms of which methodologies we use to drive users. We do both publishing, we do advertising, we run a partner network, and we develop our own in-house tools and systems to optimize our campaigns, which is quite uncommon. It's quite common to use third-party tools, which we also use in some cases, but most of our core technology is developed in-house. Well, in different geographies, we usually use different methods because, first and foremost, there's different products that fit different geographies. For example, in the US, we're currently active with social gaming and daily fantasy sports, and the most common acquisition methods for those verticals are via media buying, mainly on mobile devices. However, for example, in the UK, which we're active on a variety of different verticals, we do also publishing, odds comparison sites and informational sites about different gaming topics. So it really depends on what vertical it is in one country. Well, I think the fact that we've been doing online gambling, which is a very complicated and difficult field for the last 10 years, really gave us a comfortable feeling that we can use our core know-how and core technologies to do any kind of performance-based marketing for any vertical. We started slowly by venturing out into social gaming, which has shared several similarities to our gambling focus. And now we've seen that this acquisition engine, this machine that we've built, can easily drive high-value users to different verticals. All it needs is some tweaking from our side. Some interesting verticals we're active in now are financial betting, financial services, daily fantasy sports, which is a very interesting vertical in the US, as well as in the future we're looking into things like fintech, peer-to-peer lending, small and medium business loans, as well as several other verticals. Okay. Well, generally, in terms of development, our main investment is in technology. We invest quite a lot of time and money in developing our core systems that both help us either buy media more efficiently and more accurately, as well as practice what we call yield management, which is using the media we buy or create via our publishing assets in the best possible way. In terms of acquisitions, yes, we're looking for both bolt-ons as well as more strategical acquisitions. I would expect for bolt-ons both in publishing and in media. Good examples of that would be the assets we acquired last year in 2014, one of a sports betting assets in the UK, as well as a Danish content network focused on casino. We've also acquired a mobile set of sites focused on sports betting in the UK this year. In media, we've acquired EDM last year, which is a social gaming marketing specialist. We acquired Marmar Media this year, which is more of a generalist but focused on app installs and software downloads. And generally, we're looking for any kind of bolt-on that would expand our reach geographically and vertically. In terms of more strategical, game-changing acquisitions, I would say we're looking for ones that would either open a very interesting new vertical for us or enhance our technological abilities. Well, mobile has been a very positive development for us. Generally speaking, in some of the verticals we're active in, like social gaming and daily fantasy sports, as well as sports betting, mobile is probably the main acquisition engine and the main platform that users like to use. And we've been spending quite a lot of time and money over the years expanding our mobile technology in terms of both tracking, optimization, and reach to different kinds of assets that we can buy advertising on. EDM and Marmar, our acquisitions in media, definitely helped increase our abilities in mobile. And we look forward to actually increasing it even more as the adaptation of both mobile gaming products as well as other verticals becomes more, let's say, widespread. Well, generally we're talking predominantly about real money gambling because in social gaming, daily fantasy sports, and others, the landscape is very clear. It is fully regulated and there's no issues whatsoever. In gambling, however, we see that there's three distinct situations that we can be in. One is fully regulated environments, for example, the UK, which has a gross gaming revenue and licensing process in place. Then there's fully prohibited markets, countries like China, countries like the US.com, which we are completely prohibited for real money gambling. And then there's everything in the middle. Now for us, for XLMedia, we work in fully regulated environments. We completely do not work in prohibited environments. And regarding anything in the middle, we work in soon to be regulated environments. Now Sweden is a very good example of this. Sweden is a country that's working towards a regulation that will probably come into play in about 2 years. And what's going on there? There are Swedish-owned PLCs traded in the Swedish Stock Exchange that are Swedish domiciled, that are very active and derive a significant amount of their revenue from Scandinavia with no particular issues. For us, this is a legitimate market to be in. However, any market that we sense is going towards deregulation or towards prohibition, we will definitely step away from. And I would say that we practice a very safe approach to compliance. There's plenty for us to do in fully regulated environments. And as a whole, and if more future-facing, we would like to see regulation in as many countries as possible, for the main reason that in fully regulated environments, our systems come into play even more in the sense that we can buy more media from publishers that would otherwise probably would not want to sell any kind of gambling-related ads to us. Well, I think we want to continue doing what we've been doing. We've been both diversifying in terms of geographies, verticals, industries. We're building more websites, we're buying more media, we're investing more in our technology. We would like to make more bolt-on acquisitions, both in publishing and in media. And as we've done before, set out reasonable but difficult to reach goals and reach them and many times even beat them.